The trade war tightened financial conditions that forced the Fed to have to act in 2019. They cut rates 3 times. They raised their balance sheet by $400 billion. By doing that, did they take away some of their arrows in the quiver? Absolutely. But what we see is that monetary policy has about a 6 to 9 month lag. I think the Fed expects that maximum hit to really hit right around the second quarter of 2020. And if my good friend Larry Kudlow is right, you should see growth accelerate. The trade deals have reduced some of that uncertainty. And then eventually the Fed can get back to normalization sometime in 2021. But I really don't believe the Fed is going to have to act decisively further to the downside, meaning more interest rate cuts. And so they should be on hold this year and growth should accelerate. And that should give them a little bit of time to build up some resources for that downturn.
The Fed sounds and clearly seems like it's frustrated, Dan. I mean, it's got that foot on the gas pedal. It's like driving my old Jeep. No matter how hard I hit the gas pedal, it's not going to go more than 67 miles an hour. That's pretty much it. And we're not getting the inflation run rate. And do you think this time, this brick on the gas pedal will finally deliver a little bit of that inflation that the Federal Reserve has been looking for?
Well, I think there's 2 factors here that are important. The first is we did this big tax cut. We started to see growth accelerate. The tariffs slowed that growth down, and it slowed inflation down. What we have seen since the U.S. and China announced their truce or their phase 1 deal in early October is you've seen the dollar weakening, especially relative to the Chinese currency. By that extension, you should get higher prices, higher food, higher energy prices. Now, I know you're an expert in the energy space and the inability for prices to go higher, but we should see faster economic growth. We should see yields go higher. And again, I don't think monetary policy should be the tool for where we get economic growth from. It was needed while we had that face-off with China. Now that that's been pushed to the side, I think you're going to see a bit normalization happening in 2020.